Hi everyone, hope you're all doing well today. I thought I'd do something a little bit different. We're going to do a reaction video. So we're going to take a look at another YouTube channel, which is Pronk, who I actually think puts really good content out on the YouTube scene. And he did his version of the stocks he's buying series, that a bit similar to the one that I do. As you can see here, he's actually put a new video out in the last kind of 16 hours. And he is from Canada, so he's focusing on Canadian stocks, a bit like how I just do US stocks and UK stocks. He does US stocks and Canadian stocks. But before that video came out, he did his 5 stocks or 5 undervalued stocks I'm buying in April 2024. And I thought what we'll do is we'll look at some stocks he thinks are good opportunities, and I would kind of react to it and give my thoughts on some of these stocks here from another YouTuber that I do really like. So I'll see how this does. We'll see if this is a popular new video series, or if it's not, we may never do this again anyway. So I'm sure most of you guys probably will, but go check out his YouTube channel and see his videos here. But the first one that came up on the list was Mercado Libre. So yeah, I was quite surprised. I don't think he's ever mentioned it before on his YouTube channel, actually. I think he actually said that on the video. But yeah, I was actually surprised to see this on here, and I totally agree. I obviously have owned Melee for a very long time now. Well, I say a very long time. It sometimes feels a long time after going through that bear market in 2022. But yeah, since when I started buying, the stock is up around about 131%, but I've continued to average up on the position because I still think it's relatively attractive values. And now I haven't really bought that much recently. I think I bought once in like the last 6 months, but every so often it does have those dips, and currently Mercado Libre is having one of those dips. As you look here, from February time it did have this drop, and it's down around about 16%. And I've got to say, it happened off earnings. Earnings were actually pretty positive, so I don't understand the drop here. The company is absolutely financially smashing it, and probably will for the next 10 years when you look at the growth drivers from the e-commerce and the payment platforms that have. The growth is going to be insane for the next few years, and it realistically isn't a bad valuation now. It's currently traded at, what, 77 times earnings on a forward basis. It's even lower. That's relatively low to what it normally has traded at as well. So, and I know Pronk is a bit of a free cash flow man as well, and he's probably looking at the free cash flow ramping up on the business as well. So yeah, I totally agree with this pick. I personally am not buying myself at the moment, but if I did not have a position in Mercado Libre, I would be picking up shares right now. So I don't blame him for looking at that opportunity as a buy. So yeah, I like that one. Number 2, I'm not going to play the actual video that he put out because obviously I don't think you guys just want to sit and watch me watching this video. You can go watch it for yourself. So I'll just jump to the stocks. The next one was Alibaba. So yeah, once again, it's a stock I own, so I have no problems with this one. I do like Alibaba. I can understand why people are looking to buy it up at the moment. You know, 30 times earnings. Historically, that's a very relatively low PE that Alibaba has traded at. It's gone back to good amounts of profitability. From a free cash flow point of view, that I know Pronk does like, it throws off good free cash flow now. It's going back to growth, historically low valuation. I can see why he's all over this stock. So yeah, I think that this is a good pick once again. So I won't blame him for picking up some Alibaba at these sort of levels. Number 3 is Starbucks. Now this is interesting because I am very much considering Starbucks at the moment. I think that I would like to get it a little cheaper. If it could drop 10-20%, that would be absolutely perfect. If I could get $70, $80, that'd be absolutely perfect. But at the end of the day, you know what you can do with this long-term investing game plan is that, you know, you can buy a stock and then go, okay, I've got a starter position. If it goes up from here, I make money. If it goes down from here, I get to buy the shares at the levels that I want to buy. So it's a win-win kind of situation. So for a starter position in Starbucks, I do think it is a good place to be looking at right now. Like I said, like before, I think Daniel is a big investor of free cash flow. So I think on the free cash flow metrics, it's started to look like a pretty good opportunity. When you look at the free cash flow metrics, let's just stick free cash flow on Simple Wall Street. You can join this through the link in the description, get a 14-day free trial. And I think when your 14-day free trial is up, you get 30% off, I think, the platform. But historically, I think it's a pretty low free cash flow to the current price, and also, you know, good profitability. They're returning that through a dividend. Obviously, you know, with Starbucks, you're going to be picking up a really decent dividend up with it. That's just going to continue to get hiked. You look at the history of the dividend that's been hiked up here. That's going to be in no time up to a 3% yield on these sort of levels. Obviously, that much profitability, they buy back shares as well. So yeah, it's very rare that you see Starbucks have a time period where it doesn't do anything, and that's what Starbucks has that's what's happened to Starbucks in the last 5 years. You know, it's up 18% in the last kind of 5 years, but historically, if you look out, it's been an absolute performer, as you can see here. And now We're starting to get it back to decent valuations, good growth, good dividend, good buyback. I think Starbucks is definitely one to be looking at as definitely start position, and then if it does drop another 10-20%, I think it's start to buy up the shares quite heavy on that one. So I don't blame him for putting that one on the list. It's one that I'm currently looking at as well. The next one, Amazon. So Amazon, I've always been, that's shouting at me then. Amazon's always one that I've been a little bit 50-50 on. I do like Amazon, and I think it's one of those that if you ask me, if you buy now and you hold it for 5 years, 10 years, you're going to be up on Amazon. You're going to be up on it for sure in the next 5 or 10 years. So I don't think it's a bad stock to say it's a buy. I just don't know around the valuation side of it. I mean, obviously it's currently 63 times earnings, but the EPS is going to grow huge. From a sales growth, it's still growing at good rates. I just don't know if it's a little bit of a rich valuation. I'm sure people say we can't, the big case for Amazon is always you can't work it off PE, you can't work it off EPS because it's invested so much into its own business. Maybe that's why Daniel is looking at that from a free cash flow point of view. I don't know. I've never seen the free cash flow that Amazon does throw off, but I'd say it's a stock you can't go wrong with. My argument would be that you'd probably want it a little bit cheaper potentially, but I definitely don't think it's a bad pick. If you come back to me in 10 years and say, "Oh, I bought into Amazon," I don't think you're a loser buying into it. I think you make money on it. So it's definitely not a terrible pick here. I personally think you'd probably want it a little bit lower valuation, but it's not terrible at all. So yeah, I have no issues with that one. The last one is a Brookfield Corporation. Now, this is actually a Canadian-based company, as you can see here, headquarters Toronto, Canada. So I know they have like a dual listing on the US and Canada. So obviously, with Daniel being Canadian, he probably has quite good knowledge on this kind of stock. I have, even though I know he spoke about this stock multiple times on the channel, and I believe it's actually his largest position into his portfolio. I've never actually done the research into it, so I don't want to comment on it too much because I don't know the business that well, and I would probably look a bit of an idiot talking about it. So I don't want to talk about it too much, but they invest into real estate, renewable power, which is a big thing I've always noticed. They have a lot of renewable power, infrastructure, credit, and private equity. Yeah, I don't know. Like I said, I don't know much about it. 67 times earnings, but I think the big thing here is free cash flow. I think on a free cash flow point of view, it trades at something like 40 times free cash flow, and I think a lot of people value this off free cash flow, not EPS. A little bit of a dividend there. So yeah, to be honest with it, it's probably one that I should look into, but I've never actually had the time or researched the stock. So it could be something interesting to be there. Obviously, if Daniel's got it is his largest position, he definitely thinks it's a stock to be owning, or a stock that he thinks will do very well in the next few years. If if you're a YouTube channel, you always kind of have that one stock you kind of say, this is the one that I really like, and you quite often get judged on those sort of stocks. So it historically looks like it would be a good one to back, to be fair. So maybe I should pay a little bit more attention, have a look into this one. So yeah, those are the 5 stocks anyway that Daniel thinks are currently good undervalued stocks to be buying, and I've got to agree. I don't really know Brookfield that well, but I'm sure it probably is a decent looking company. But the other 4 I definitely think are good opportunities, especially the first 3, Mercado Libre, Alibaba, and Starbucks are definitely 3 that I think I could quite actively, easily be picking up right now anyway. So anyway, a little bit different today with this kind of reaction video. So I don't know if it's something you'd like to see more of, reacting to other people's buys and mentioning other stocks that I potentially would never mention. I probably would never mention Brookfield anyway. So maybe you'd like to see a little bit more of this anyway. I'm going to keep it quite short today, guys, because I am not feeling that well at all. I don't know if you can tell, I'm really blocked up. So yeah, I'm going to keep it nice and short today, but I hope you enjoyed it, and hopefully tomorrow I'm going to be well enough to do the UK stocks I buy in April video for you guys anyway, so we'll see what happens. So see you in a bit.